everyone. Hi, everybody. Welcome to the podcast, HG Podcast. My name is Jung Ki, and this is Jung.
Vin.
And today we have Jung Kiet with us. Before we start, I'll remember this time. Let's open our cans. Jung Kiet already has a fancy...
Ooh, what are you drinking there?
It's just a nice Americano.
Oh.
I don't like sugar.
Jung Kiet, can you tell us how long you were in Tilnyi and what you do now? Just kind of give us your credentials, I guess.
Yeah. I think my Tilnyi history is a bit spattered because I joined when I was a Tilnyi and then I quit.
Yeah.
And then I joined as a Ngisi and then I quit again.
Yeah.
And then I joined as a Hip C and then I stayed. So I think as a Hip C, I guess I'll just count from that. I guess was probably from a Hip C or Ngisi all the way to 6-7 years until I was around 22 when I was in Winchuang for a bit. And then I kind of left. I left during COVID, actually, 2020. So that was 4 or 5 years ago.
Yeah, we lost quite a few hunters during that time. But
I know.
Yeah,
and I know you taught like older kids too, and I think you probably enjoy teaching the older kids.
I did not.
Oh,
I
never
enjoyed
mind.
teaching the older kids. I actually wanted to stay in Onyi the whole time. I always requested to teach Onyi because I found it the most simple and then also the most enjoyable to teach little kids because they're cute, you know? But then they kept moving me higher and higher up the age bracket. I was like, God damn.
I think a part of it is you're very mature for your age.
Yeah.
So when you get someone who's mature for your age, you want them to teach older kids too.
Yeah.
Right.
You know, what's interesting, we have a Hunchung, or soon to be Hunchung, and this year coming up, that we all assume that might do better in Aonyi, but that person requested to teach in Yasay instead.
Yeah.
So, you know, we might give it, you know, we're probably actually going to do that this time.
Oh,
this time
great,
around.
great. She'll get what she wants.
Yeah.
So
I think Tilnyi was the most awkward age to teach because it's at that middle school age. It's pretty. Ngisi is not too bad.
Yeah.
And it's like the in between is the worst.
It is.
The worst.
It's like those middle school, like, you know, adolescent when you get going through puberty. That's really awkward age. Yeah.
So what do you do besides Tilnyi? What do you do for a living?
Oh, now I work as an investment analyst for a single family office.
Oh, I think that's finally this podcast was intended to be more about finance stuff, but we actually have a financial analyst now.
It took so long to get there, and after this episode, we're gonna stop because
we've reached the peak.
We did it. Podcast. The goal is met.
So, how did you thought about going into this profession? Because not everyone is thinking about this, it's either doctor, especially Vietnamese, doctor, nurse, pharmacist,
engineer.
Yeah, they don't think, because when you think about it, like what people think is money. But I assume that's not the true reason you got into it.
Well, I mean, originally when I went to college, my freshman year, I went for a STEM career because like that's what your parents push for and stuff.
Right.
I did 1 quarter of like STEM classes. And I was pretty good at it, to be fair. And I was like, I can't do this for like the rest of the 4 years and for a living. I just couldn't take it. So then I was like, at UW, if you're not doing any of the STEM majors, like there's only business left. Unless you want to do art.
I love that.
Just 1 air quotes, not 2.
They only deserve 1. It's only half a degree.
It's okay. Technically, my degree was an art degree too.
Yeah, shots fired.
I didn't get a B.
I took a lot of art classes though. I really enjoyed it. But
just want to stop you very quick. Kiet also does pottery too.
Oh.
I did do pottery. I did pottery senior year of high school, and then I did 2 quarters in 2 or 3 quarters in college.
Are you still doing it now for fun or anything?
No, it's too much effort, and you need a really big space and a lot of equipment.
Yeah.
But they cut me off after a while because they're like, unless you're an art major, you can't keep taking the art classes. So I did like art history, sculpture, and pottery 1 and 2. Yeah.
So you didn't go into an art major, but you enjoy the arts. So you didn't want to go to art. You decided to go into business.
But technically, it's an art degree, the business, like the arts of business.
What? I didn't know.
It's not a science of business, right? Because like a lot of business isn't really science,
Yeah.
But I went into the business school, and then I was talking to my business counselor, and they were like, "Well, what sub major do you want to focus on?" Because there's like informatics and accounting and stuff. And I told him, "What is the broadest one?" Because I didn't know what I was going to do with this degree. I didn't know what I was going to do with life in general. So then he was like, "Finance is probably the most general." And then you can also do supply chain. So I had 2 sub-focuses. I did supply chain and then finance is what I did.
Nice.
Yeah.
And so graduated, and then you're probably gonna ask me how I got into the job I'm getting into.
Oh, well, I just want to stop really quick. Is I know Kit pretty well, and he, again, I mentioned it earlier that he's very mature and he's very well spoken, very calm demeanor. And when I see him, I kind of knew him during this period. When I see him, I always imagined that he knew exactly what to do with his life because he gets amazing grades, he takes care of his family, and he knows what he's doing. So when he mentioned this, when he just kind of just picked like a very broad thing to do, and then actually listened to his, like, went to his resources, his counselor, because some people don't do that. You know, they just take the degree, and then they're done with the degree, they don't know what to do with it, right? But you went to your counselor and they actually guided you to do this. That's pretty cool, actually. So yeah,
I was perfect for business. You fake it till you make it.
Okay.
So why did they tell you to go into kind of this finance side of it?
Well, I told them that I want the broadest degree, so that's why I went to finance.
But you weren't afraid that because it's so broad that you wouldn't know where to do after that, or you were just gonna figure it out later?
I was gonna figure it out later.
Yeah.
Again, fake it until you make it. Because I know like finance is like finance is a very broad degree.
Yeah.
You could do anything.
Yeah.
It's almost like an English degree in which like what are you actually gonna do? Like, you could become like a store manager. You could go become an accountant if you want. You could become like anything.
So then during college, did you take a lot of classes for each of those subtopics, like accounting or taxes or whatever?
It was a focus on finance and operations. I actually really like operations. Operations I had a lot of like efficiency classes and Excel classes actually. Yeah. Probably some of my favorite classes.
Oh, okay.
I might have ended up working for Amazon if I didn't like get the job I got now.
Would you still apply? Would you still want to work for one of those bigger companies nowadays?
I've never worked for a big company.
Yeah.
I've always wondered what a big company would be like. My company is like 35 people or so.
Oh, nice. Small.
On the smaller end.
Yeah.
I've always wondered like I would like I was at the office politics would be interesting to play. Maybe I would be good at it, you know, like just like coordinating between like different people starting shit, you know.
No, actually, I found because like when I started my company, it was not as small as yours, but back then Tableau was super small, like a few hundred employees. Then it eventually grew up to be a super large company now. Yeah. Especially with our Salesforce acquisition. The culture is totally different. Sorry, I can't talk. The culture changes going from a small to a big company, definitely. It is. But so far, so good.
Even my company, when I first started, it was 20 people. And it grew to 35. When it was 20, it was very intimate because like everybody knew each other. And then the office layout, you could see everybody. Now we have a much bigger office, and then like the accounting people are on their like little corner, and we're on a different corner. So it feels a little bit more disconnected.
Have you been at the same company since then?
I have been at the same company. I've switched teams once. Yeah.
Gotcha.
Changed roles a few times, so it's been the same office.
How was the job search? Was it difficult?
Surprisingly, no.
Maybe it was the right time. Maybe.
Yeah, it might have been. It was at the end of 2019, right before COVID. So actually, it's not a bad time if you're looking for a job. I think actually it was a great time because things were still heating up in 2019. But my job search was pretty simple. I was on the Husky job board, just looking at like it was like my last quarter of senior year, and I was just searching for random jobs, and then this one job posting came up for this company, and it had a very brief description. It's like analyze Excel spreadsheets. I'm like, this is terrible job description. Like doesn't say anything.
Before ChatGPT days.
Like so our company we do like sort of back then they did their own hiring. There wasn't like an HR because it's a small company, so there's not like an HR person to like put the job postings up. And then you would Google the name, and they're a very private company, so you Google the name, you don't see anything online. So there's no website, there's no like directory page or anything. And then you go on LinkedIn, and there is a LinkedIn page, but there's only a very few information, and they didn't even have a picture.
Was it kind of sus?
It was very sus. I was like, this is probably a scam job posting. But I was a desperate senior in college. I was like, whatever. It's just a resume. Like, what's going to happen? So I sent it in. And they actually gave me a call.
Was this the first job you applied for?
No, I applied to several, but I've done several interviews. There's a funny one with Tableau that I could talk about too.
Yeah.
No, not Tableau actually. It was with
Salesforce.
Different companies. I forgot the name. It was also a tech company. Yeah.
How was that interview?
I came in and they had me do this whole Excel spreadsheet as homework before I came in. And I was going to interview with 4 or 5 people. And they cut me off at like the second person. And then I got sent home and I was like, what the fuck? I was like, that's kind of stupid. So I actually know why they sent me home. It's because one of the questions they asked me during the second interview was, do you follow instructions well? And I was like, well, I do, but if I disagree with it, I'm going to disagree with it. That's why.
How do you feel about when the interviewers give you homework to do for the interview? Like that, like the Excel thing, for example? Because I've seen that more and more these days.
That's cool. I mean, like, it's fine. Like, it's like a fun little thing to do. But it pisses me off that we didn't go over it, though. Because I did it.
Right.
And the person who was supposed to go over with me, like the third or fourth person, and I never got there.
I've seen that too.
Cardo, I remember it was Cardo is the company.
There you go.
Don't apply to Cardo. They suck.
Oh no.
Little pitch.
They sponsor us. Oh no. I remember we interviewed for a clinical pharmacist job, and they were asking, they had like a bunch of clinical questions and stuff like that. And they actually kind of gave you the patient beforehand too. So it's definitely more common now, especially at the higher level.
I feel like for medical, like clinical and pharmacist or doctor, I think that's a given. Yeah. But for this, it's just Excel. It's basically they were testing to see if I had a brain or not.
Yeah.
Because like the questions and the answers were like embedded.
Yeah.
In the other formula. So if you had just like some analytical ability, you could just look at the other stuff and be like, oh, okay, this is how they do it, even if you knew nothing about what they were doing.
Because of that answer you gave, they thought you had too big of a brain.
Yeah, it was just fine. I don't know.
Yeah, I'm pretty sure you're happy now.
The guy that interviewed me was like, he had a broken leg or something. He wasn't in a great mood anyway.
Yeah.
You know?
It could have been something else too. Yeah. So when you interview with this company, the company that you're working with right now, was it easier? Was it a completely different process?
Yeah, so this is the suspicious company. I did the phone call and then it was fine. So then they invite me into their office, and then I go into the office in downtown Seattle, and I walk into the lobby. I'm like, this is a dang good looking lobby. I was like, this is fancy.
It's mafia.
Yeah, like fancy. No, like it's a really big building. It's one of the nicer buildings in downtown for office buildings. And then I go, and their office was on the 39th floor. And I was like, and I go into their office. I was like, this is a really nice office with a really nice view of Mount Rainier. And then so then I sat down. I had the interview, and during the whole time, they would refer to the family as the family.
So it was mafia.
Yeah. Well, I work for a single family office, so the office serves a single family, and so it's like family. And then after the interview, I was like, can I like know who the family is? But like, if you can't tell me, you don't have to tell me.
Yeah.
Like, I don't
Oh, you asked that question?
Yeah, I was like, I don't have to. If I don't need to know, or I can't know, I don't need to know. I don't want to die today. You know? But they were like, oh yeah, you can tell. So they told me about the family for a little bit.
Was it in the Columbia Tower? No.
It was in 2 Union Square.
Oh, okay.
2 Union. So if you're driving up I-5 into northbound into Seattle, you'll see it. It's like directly on the. Oh. It's the one with the little flag. You see it right in your line of vision.
I'll have to look at it this week when I drive up.
So if I'm a 5th grader, just tell me really quick what your job is. Very simple, because right now I keep still thinking you're working for the mafia.
I'm in the garbage.
Oh man!
There's a reason why the Seattle River smells. Oh wow! It's not the wood pulp. But I think my job is basically 2 things. The first being talking to investment managers, hedge fund managers, and different. I go to a lot of conferences and meetings. So I'm in New York a lot. So basically, I'm just talking to these people, and they're trying to sell me basically their fund, their investment idea, etc. Yeah.
And then
so you manage a portfolio.
I help
the family.
Okay. So I have a boss. She is the portfolio manager.
Gotcha. So this family has money, and they give this company their money, and the company you work for is using that money to invest. Is that give it right?
So, I'll think it differently.
Oh, okay, yeah. Maybe you say it and then see if
which one is right.
Yeah, which one's right.
Okay.
Yeah.
My take is that other companies will, like you said, try to sell you their investments, and then Git's job will be to analyze those investments and see if they would be a good choice for his company to invest to either invest in.
Yeah.
Yeah, but where is the money coming from? Where is his?
Oh wait.
It's a family, right?
So a family office. So let's just say a family, really rich, like Bill Gates has a family office. He has a single family office because he has a ton of money.
Yeah.
So if you're like a high net worth individual, if you have like a few 10, 20, 30, like maybe $100 million, you're not going to have your own office because the cost of having your own office is too high at that point. Wow. You would go to like a Laird Norton or like a Freestone Capital. They're in Seattle. They're like a multi-family office. They manage money for like smaller, quote unquote, smaller families. But like Bill Gates is rich enough to start his own office.
Okay.
I think his is called, I forgot what his is called. You can probably Google it, his family office name. But so he hires his own people and they manage his money directly. But the thing is, like, wealth managers, when you go to a wealth consultant, they're not like selling you the investment directly. They're not gonna, there's investment managers whose whole job is to take a pool of money, outside capital, and then invest it in stocks, bonds, real estate, whatever, industrial assets, etc. And they usually package that into an LLC or a partnership. And then you as a wealth consultant would subscribe or like invest money in those partnerships.
Yeah, using the family's money.
Yeah. But Bill Gates, like a family office like Bill Gates, they would do direct investments. They'll invest in stocks themselves. They probably have in-house teams that directly invest in stocks and real estate and other stuff. So it depends on the scale of your wealth.
Gotcha.
So what is considered high net worth?
I think high net worth is over anything over
100 million?
$1 million of net worth, like net worth,
million?
liquid. I think that's when you start considering like, because they bifurcated between high net worth and then like ultra high net worth is probably when you get into the nine figures, like 100 million and up.
Yeah.
And then you have like the billionaires like Bill Gates, where you're just like these, they're basically running their own country at that point, like because their income and like wealth is basically more than some countries.
Yeah. Gotcha. So how I see it, as to explain it to myself and also everyone, is I'm not high net worth. So my way of investing in stocks is I go to just a broker like M1 or Robinhood, and I click and buy whatever, right? But for these type of people, they have their own company. They have people working for them, specifically a family company that goes out and buy those type of things for them. And it doesn't have to be stock. It can be many different type of things, investments.
Well, they have people that analyze it and like generate an opinion on it and then buy or sell it.
Would you be able to tell me what kind of access of investment compare what, let's just say your media, not like crazy high net worth like Bill Gates, but like for your company, what kind of investments are they able to do that I myself as a normal person can't? With like Robinhood.
There's a lot. There's a lot actually. There's a lot.
Yeah.
So, a lot of the biggest hedge funds in the world or like investment funds, like Citadel is a pretty big name. I don't know if you ever heard of Citadel, right? You're not going to be able to invest with Citadel in their funds unless you meet a certain requirement, and that's a legal standard. You have to be a qualified, you have to be an accredited investor and qualified. And so it's like the people who are really good at analyzing stocks, shorting, buying, etc. They only cater to the high net worth individuals. Like, so small people like us, I guess.
Yeah.
Like they don't have time for these little crumbs of
not enough money for them. Yeah.
They're going for insurance companies and pension funds.
That actually reminds me, like recently I went on my brokerage and I found a particular stock that I was interested in, but it says that I need to meet a certain income threshold, or like I need to invest a certain amount of money in order to do it. In order to invest in it, like 10 million or 1 million or something.
Like commercial real estate is something that, although it's starting to change now, but like commercial real estate is something that we probably can't do. Like a 200 unit multifamily apartment building in Seattle. Like you're not going to be able to invest in that.
Yeah.
Only really rich people can be like, okay, I'm gonna invest. I'm gonna be the whole equity in that. Although there's like a few companies popping up where they like do that and then like give retail investors some access. Yeah. There's been a big push to give more retail access to these types of investments. Yeah. But what happens is they charge you a much higher fee.
Yeah. And by retail, you mean people like us.
Yeah, right? non-high net worth, right?
Yeah.
The more money you have, the lower your fees are going to be, because they're going to be like, oh yeah, we're not going to charge you like a 2% management fee. It's going to be a 1% management fee. But for like retail, it's going to be like a 3% management fee. So.
Do you think with all of, let's say percentage wise, because when I invest in stocks, I'm not paying anyone. I'm paying a fee, of course, right, but relatively low compared to hiring people, like either hedge fund or having my own company to take care of it. Do you feel like those type of people, like your company, all tend to do way better than the normal people, percentage wise? Obviously, have way more money,
At some point, it becomes less about. It's always about the absolute returns, but the other factor is the scale of operations. Because like for you, it's easy to invest in like low ETF funds and whatnot, but once you reach a certain amount of wealth, deploying capital becomes extremely tedious. Like $100 million. Like, are you gonna how well are you gonna move $100 million by yourself into the various stocks? Right. It becomes very hard to move.
It sounds like a rich person.
But Robinhood will be like
100, 200,
Yeah.
300, 400, 500, 600. I'm like, at what point, there's a point where you're like, I need people and I need these investment fund managers to invest for me because I'm not going to be able to move the market. I'm not going to invest in a stock, move the market. There's just too much money to invest and you're not going to invest like 200 in one stock, right? So then you want diversity too. And then that becomes an exercise in execution.
Yeah.
Gotcha.
So basically, just leave it to the professionals.
I think that's
At a certain scale,
Yeah.
it becomes better.
Yeah.
And they also generate higher returns generally.
And correct me if I'm wrong. The thing is not, because you say it's not all about absolute return, meaning like the rich people will make more money percentage wise than I would. It's more about the rich, wealthy people will prefer to spend their time with something else because with the amount of money they have, it will be logistically
Impossible.
time consuming for them to be doing this.
It would be
They'd rather
impossible. For them to do it by themselves.
So they'd rather have their time, right? And let someone else do it.
Yeah,
Gotcha.
when they just couldn't do it.
Yeah. Or they just couldn't do it too.
Yeah, sometimes like the people who come into wealth, most of them it's not from finance, right? And like in the Seattle area, it's mostly from tech.
Yeah.
The tech bros are not gonna like manage their own finance.
Yeah.
You know?
Yeah.
They're great at tech, but they're probably like kind of
Crap at
crap at finances. And like the really wealthy people in their family offices, a lot of it also has to do with like services like planning trips for them or like paying their bills, doing their taxes.
Oh, yeah.
The richer you get, the more tax sensitive you become.
Gotcha. So you mentioned you kind of help manage a portfolio. Yeah. So there's many different portfolios in this company, and you just manage one of them. It seems like. What can you tell us? What kind of portfolio?
I work on fixed income, alternative fixed income. So any strategy that's more like credit related. And then there's other portfolios for like real estate and public equities, private equities, and venture capital.
Credit meaning like you let other people borrow money, and then your income comes from them paying interest to you back or something.
Yeah, primarily that's what it is. But there's a whole bunch of different types of fixed income too. Like you could something that falls under alternative fixed income, for instance, is like aircraft leasing. Oh, like in that instance, you're like, oh, but I own an aircraft. But you have a contract with like an airline for 10 years and it's pretty ironclad. So then it's a quasi fixed payment every single month. So then that's like an alternative fixed income.
Yeah, this is very confusing to me.
I get that.
I'm so glad.
Yeah. There's like strategies like that, right? Or another interesting one is like music royalties is often categorized as alternative fixed income. You're buying the rights to the stream of income from some music, right?
Yeah.
Like, how Mariah Carey's All I Want for Christmas Is You. She owns the right to that.
Yeah.
You could probably buy it, but it'll probably cost you like a crazy amount of money to buy it.
Yeah.
But like there's like you can buy like a whole selection of like weird songs like it's used in like TV or like malls and stuff. And then there's a stream of income.
Yeah.
And it's like at this point it's like generally kind of known what that income stream is. So that's alternative fixed income. And that's not a loan, right? You're actually owning an asset, but it falls under.
I gotcha.
So do you have any tips or recommendation advice for starting investors? Like the best thing you can tell them?
Oh, I don't generally give investment. As a part of my job and as a part of my my credentials, I'm not supposed to give it.
That makes sense.
Yeah.
So I guess from a general like
But just like personal point of view.
philosophy kind of thing. I'm like, just know what you're investing in, and then try to don't be skittish when the market turns volatile.
Yeah.
Because like some of the stuff I invest in, I wouldn't recommend other people invest in, because like from my personal account, because like it goes up like 10-20% or down 30%. And some people are like, oh, there goes my whole
That's very easy to say. Like, don't be skittish when it drops. And that kind of reminds me of what happened during COVID, where everything was dropping. And I'm a very simple investor, right? And during that time, it was, I'll just buy into the index, right? I'll just buy, so index is a bunch of, pretty much all the stocks in the market, whatever, right? So I'll just buy into the whole market when it's dropping. And I knew that's what you're supposed to do. I listened to all podcasts and saying, this is the time to do it. You're not going to get another opportunity. But it was still very difficult, because whenever a market crashed crazy like that, other things are happening personally. It's like, am I going to still have a job? Am I also, all those things that I think about kind of came into the thing. So I did buy into it, but I definitely did like borrow, I didn't go all in. Because I need to make sure I protect. You
should have been like, I just want to break out my HELOC, get some personal loans from the bank.
Exactly, like credit card loans and stuff. Like
I killing.
But if I did, definitely. But at that point, while you're in the moment, it's definitely difficult.
It's scary.
And I think that again makes it seem like investment, and pretty much what you're saying is behavioral, right? So
it's easier for rich people to do that kind of thing, because it doesn't matter if they
lose a couple mil,
lose a lot, because they still have a lot. That's why rich people actually have been getting richer every single downturn.
They still have the money to invest.
And people just lose. Actually, we're actually I think we're at an interesting point in society where it's like, because of inflation and the cost of living and other factors, the lower class and also the middle class and even the upper middle class is kind of getting squeezed, and then like the wealth is actually just going upwards.
Because anytime when you have that income, like you mentioned, what your kid's saying is, when you have that disposable income or a big amount of cash sitting on the side, you can use it and not be afraid to use it when it's time to strike, when it's time to invest, right?
Or if you have like a trust fund, you'll always be good for life. So that any other excess income, you're like, bam.
Are you giving your son a trust fund?
No, I'm thinking about just buying each. They can I'll help them buy a house and then teach them how to manage the house. That's what I'm thinking. I'm not at that level.
Open a custodial Roth fund or something.
No, maybe. But I just want them to, because I don't want them to inherit my homes, my houses later on and not know what to do with it. But back to Junkiet. So we didn't actually dive that much into what you do on a daily basis. So I was wondering,
that was the first part, like meeting managers and stuff. The second part is I look at the investments. So they just send me slide decks, emails, information, and then I write reports, and I submit it to my bosses.
Gotcha. So are you traveling? You mentioned you go to New York. Are you traveling pretty much every week, or?
Oh no.
Okay.
Like maybe three times a year, roughly.
And gotcha. I take it you're in office 5 days a week.
Right now it's 4.
Okay.
Right now it's 4. 4 or 5.
Do you? Personal question: do you use Tableau at all?
No, I don't.
Damn.
Tableau more of like a
BI.
Yeah, it's like a to present information.
Yeah.
It's not specifically geared towards investors.
True. Yeah.
There's a different product called like Adapar that's specifically geared towards investment performance reporting.
Yeah.
Much better. Yeah. But like next month, for instance, I'm going on a business trip actually. I'm gonna be gone for like 10 days. I'm going to start in San Francisco and then go to Dallas and then Houston and then end up New York.
All around.
Yeah. I go to New York. That's where all the investment people are, in New York. New York and San Francisco, and then also now Miami.
Gotcha. Yeah. So when, let's just say you go with your team, like your boss that manages the portfolio. So you kind of go with the team, you get in the airplane, you land on San Diego or whatever. Yeah. So do you guys go to a conference with a bunch of people kind of advertising these kind of investment products to you? Or do you meet them individually? Or is it a combination of both?
I've done both.
I just can't imagine this life. It sounds so interesting, to be traveling and then people kind of selling their product to you, right?
So like in New York, it's more one-on-one. You set up the meetings ahead of time. It's just like with individual managers that you want to meet. For the past 2 years, I've been to Miami to a conference where it's like just thousands of people, and then you like have like 15-30 minute meetings with like random managers back to back to back to back. It's pretty exhausting, but Miami's pretty fun. I've got to visit Miami like a few times because of that.
Nice.
Which one do you prefer? Do you prefer just to go in, get it done, meet everyone in a conference, get my information, bam, 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 go back, write my report? Or you prefer the one-on-one, hey, I just arrived at the airport, I'll see you at 2 at this nice restaurant, that kind of thing? Like, which one do you prefer? Or do you like both?
I like both, but like I'm relatively new to this industry, 4 or 5 years into it.
Yeah. 4 or 5 years is pretty for Huing Chun that is listening right now. That's a long time.
That's a long time.
That's
right?
a long time.
But for like a career or profession, it's relatively short. You're still like you're beginning to approach the middle intermediate. Like also, I started off in operations and not investments. So then I did 2 years in operations before doing investments. So I've been doing investments for only like 3 years.
Oh, okay.
So relatively even newer.
So when you meet them, are you going to these, let's say, parties, or do you see all these like super rich people too?
You do see a lot of rich people. Actually, with the conference in Miami, I saw one of the speakers was Shaq.
Oh,
Yeah. And also, I saw that was this year, 2024. 2023 was the big celebrity that was Kim Kardashian. So you saw her on stage.
Nice.
Dude, for Shaq, like the man is humongous.
Yeah.
Like in person, you wouldn't realize it because like the speaker, this is the speaker, and they're sitting way far apart, more like way far apart, and then like he reaches over to grab a piece of paper from her, and literally his arm just kept going. And I was just like, man, this man is humongous.
Yeah. He's grabbing like a can of Coke, and this looks like a mini Coke.
Right. No, this was probably like a tiny little, like a Tic Tac to him,
Yeah.
But like he's huge. So you see rich people.
So you enjoy those conferences, and it seems like you also enjoy the one-on-one kind.
Yeah, I think I'm going to a lot less conferences now, just because they haven't been as fruitful.
Oh, okay.
I'll tell you an interesting story from one of the conferences. Is that I was in Miami, and then there's a neighborhood in Miami called Brickell, which is a really hip new neighborhood in Miami where all the sky rises are coming. And so I got the chance to go to a manager's like after conference like drink thing. So I get to the building and I go up the stairs, and his house was the penthouse of one of these fucking like skyscrapers, right? So that we actually go to the floor right below the penthouse because the elevator was still getting built, and then we walk up some stairs up to the top, and you're at the top, and you see all of Miami. You saw all of Miami, and you could see all the way to the Everglades too. And I was just like, damn, this is what wealth is. It was like crazy.
Hey, that's crazy parties.
That's rich people, man.
Rich people. Yeah. So I want to ask for the Huing Chuns out there that if they want to get into your profession, like how would they do it? Just go because it kind of happened to you naturally, right?
Yeah, it was pure luck. I would say that I have no idea how to get into this. Like ordinarily, I have no idea how to get. Well, I kind of have an idea. Most of the time, so like for a family office, they usually hire people they know.
Yeah.
That's the first thing they do. They ask for like recommendations from like their current staff if they're looking for someone, or they go to a very specialized like recruiting agent for the role. And there's not that many family offices out there in the world. Yeah, because there's only so many rich families out there.
Yeah.
In terms of like the investing industry in general, like I would say, go to San Francisco, go to New York, and just try your best.
Yeah, that makes sense. Yeah, I like that answer with the general investing. Yeah, for sure. You go where the business is. Yeah. Right.
And if you really actually want to end up in a family office, very specifically, I would start in like wealth management and probably work your way in that ecosystem, because we're not like investment managers, we're wealth managers, right? For a family, right?
Yeah.
So if you go to work at like a wealth consulting firm, slowly maneuver yourself around, and then eventually end up at like a multifamily office. And then from a multifamily office, if you have like a particular client that really likes you, you might end up in a single family office or something like that. If that's the pathway you want to talk. But wealth management or like wealth consulting is a lot different from what I do, because I don't know if you understand the nuance between being a wealth consultant and then an investment analyst.
I do not.
Okay.
A tiny bit, not
Well, like a wealth consultant is like, if you go to like a Charles Schwab or something, they'll sit you down there and be like, oh, this is what I think you should do with your money. Like, these are the products that you should diversify your portfolio in. Most of the time, they just have like a template that gets dictated from like probably above. And like, okay, for this age, for this person, they should be invested in these things.
Yeah.
And they just kind of pitch that to you. And then an investment analyst, I'm the one that's looking at the underlying investments. So I don't talk to clients at all.
Oh.
I don't talk to any clients. And I don't talk to anybody about like what to do with their money. I'm very specifically focused on this pool of money and what to do with it to meet the objectives that were laid out for it.
Yeah. Gotcha. Because most people think like financial advisor. Right?
Yeah. Like
that's definitely not what you do.
that's not what I do.
Okay. Good to know.
Yeah.
Just a final kind of like a fun question. If you had the choice between retiring at 45 and kind of having like a modest income, like you invested really well, you invest in the right stocks, whatever, high dividend stocks, and you're getting like a modest income and you can live the rest of your life pretty much kind of in a luxurious way, not too crazy.
Kind of luxurious way. Like,
Kind of like enough, like your lifestyle right now. How about that? The same lifestyle that you have
Continue
now.
what you have now.
Yeah, so 45, right? Or
Assuming no family.
yeah, well,
Because you said right
Yeah,
now.
like if I had
that's
kids,
a little different. Yeah.
that's true. That's true. Assuming no family yet,
Yeah.
right? Or wait till you're 65 to retire, and when you retire, you're like a billionaire. High level of worth. Which one would you pick?
I would do 65 billionaire all day.
Yeah.
And that's just because like I would just be bored as a 45. Like if I retire now, if I retire now, I'll still be working. I'll be probably doing something.
Yeah.
But if I'm gonna do something, I might as well build wealth, and then maybe I can pass it on to my offspring if I have offspring, right? But like, yeah, I can live a modest life at 45 until I die. But at 65, I'm still pretty young. Like, look
Nowadays,
at like Jeff Bezos or
Living his life right now.
his life right now. And then I'm gonna bet on the fact that at 65, if I'm a billionaire, I'm gonna have access to really advanced healthcare.
Yeah.
That will make me more like 50 or like 40. Like,
Extend your life some more.
At that point,
Yeah.
healthcare will probably advance to a point where like, especially the billionaires can live a lot longer. And I'm gonna, with that kind of money, I'm gonna do everything that I kind of want.
Those people like Jeff Bezos, Elon Musk. Yeah, when they were in their 30s and 40s, they were looking kind of crappy physically.
Yeah.
But then after, some
Elon still looks crappy.
Yeah. We had less hair back then, actually. But then, after some age or some net worth, they just start looking so much more better. Maybe they got a physical trainer or something, but they just look a lot better.
I think Jeff Bezos is doing it right, in which he's basically gotten out of the rat race. He's gotten super fit, super buff.
Yeah.
So found like, I guess, a woman that he likes.
Yeah.
And all he does is just travel the world and have fun.
Yeah, that's true.
And I feel like that's what a billionaire should do.
Yeah.
Once you reach that stage. Elon Musk, I feel like, has some mental issues. So then like he's at the point of his life where he's like, he doesn't know what to do because all of his kids hate him and all of his like previous wives or girlfriends hate him.
Yeah.
He basically has nobody around him that actually likes him. So now he's just like, what else is he gonna do?
Yeah.
I think mentally, when you're his level though, also like when you have a mentality of like efficiency, work, it's almost impossible.
Maybe
almost,
there's like I said, mental issues. There's something like a normal person like Jeff Bezos, he would be like, I'm good. I'm good.
Yeah,
I'm good. Or like Bill Gates.
Step down as CEO.
Bill Gates is also like, okay, I'm good. I'm gonna go just do philanthropy.
Yeah. I think you mentioned something here that some people might not recognize, and I completely agree with, is if you retire at 45, you'll be super bored. Right. And if I retire at 45, I would not stop working. Like I won't truly retire. I would keep on working. Even if I could, I think I can probably at 40, 45, probably 45, I can probably not work, but I would still work.
That's something.
Yeah, you got to do something. Yeah, and that's the problem with sometimes the trap that people get into when they think like, I'll work towards a retirement.
And it will probably be something hard and challenging too.
Yeah.
Because if you're not doing anything hard or challenging, you're going to be bored anyway. It's like,
you travel so
if
much,
you're going to be doing something
bored.
hard and challenging, you might as well just keep climbing your career.
Corporate ladder.
Well, it's really good to have you here.
It's been like 3 years since I've seen you. I feel like you're a lot more your demeanor's changed a little bit. You feel more well spoken.
Yeah.
Maybe
He's always been well
maybe just for
spoken.
this podcast. Maybe
Yeah,
I could be wrong. Your voice seems like you get a little deeper too.
Deeper? Oh, yeah.
He's doing the Jeff
My
Bezos
balls
thing.
dropped.
He's doing the Jeff Bezos
No,
thing.
like the past 3 years has been pretty good for me in
Nice.
terms of personal growth and
I'm glad.
self-confidence and stuff.
I'm glad to hear that, man.
Yeah.
Well, we appreciate you stopping by, giving us I'll be honest, very high level stuff.
Yeah.
Right.
Yeah.
So, and hopefully our guests or our audience can get glean some of the high level stuff and kind of translate it into a low level.
Yeah. So
And
basically,
use it.
if you're gonna make money, go do that. Don't do what we're doing.
I mean, like if I was to redo my life, I probably wouldn't have picked this career. I probably would have done like dermatology or radiology. Right? Just like just cruising through the healthcare system,
Yeah.
you know? Like
That's negative too. But thank you, Trinket. Thank you for stopping by.
Cheers.